up there, and I'm going to upload this, move this over. And guys, I don't know if you are getting it. Can you guys let me know? Are you guys getting any echo or feedback here? You guys getting any echo or feedback here? Just want to make sure. Okay, good, good, good. So I have a little bit for myself because I don't know why. It's just all of a sudden. I don't know if I accidentally shifted my desk over or something, but just all of a sudden I am hearing myself talk. And oh Lord, does that's called Chinese torture in some places. Oh man. So maybe it's just, my voice in my own head. Now we are going to be talking this Sunday about this Sunday session. You got a lot of opportunity. Been doing a lot of research, and not just what's going on right now, but also future marketing, future market predictions as well. Like what's going to happen over the next year, the next 5 years, the next 1 year, 3 year, 5 year, 10 year, and we're going to talk a little bit about that and kind of get deeper into those things as well. And then I'm going to look into top. And we're gonna be going into some of those trades, all of that that we've been looking at, as well as some future tech that I want to talk about. Okay, because I personally, right, believe is Andy on the call? Rick? Now is that Rick P that I know from back in the day? Yes or no? I don't think so, Rick. Good to see you, buddy. Good to see you. He might be in a little bit, but so let me actually go into it really quickly. Before we begin, let you know I'm not a commodity trading advisor, simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk, take on that risk. Okay. This is me. Got a lot of credentials. Working on my doctorate in finance and economics, have my MBA in finance and global portfolio management. I own and have founded a retirement and estate planning company that I've actually been doing uh, for a few years now. And so, Rick, shh, okay. How about that? And anybody else? I also am the founder of a managed fund where we do individually managed accounts. I can tell you this: we're up nearly 17% on the year this year, and looking to have another big breakout year as well. Been in trading education for 15 plus years as well. Um, and the purpose of our meetings here today, right, is market insights, give you guys those, showcase some tools. Not let me tell you this first and foremost. I am not here to sell you a damn thing. Excuse the French, but parlez-vous français, okay? Okay, Rick, how about this? Email me. How do I just respond to you? I think if I click your name, there you go. James, email me and I will check in. What is my email? Oh my goodness. Yeah, that's what it is. Woodford. How about that? I'm gonna give you my personal one, Rick. Just do this one. This is my business one and fl.com. And then I'll make sure that you get access and we'll follow up with you, okay? No, sir. No, 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 no. I've left 3 or 4 years ago. I'll tell you that now. So showcasing tools, talking economics, as well as learning from you all, giving you guys insight. And we're going to talk a lot about that. So some of you in here know me from back in a previous company. I'd left that a while ago, and my goal is to do something that's truly going to help people grow, make money, and get the type of returns that I know are possible. Now, there's still some tools that I love to use, right? So we're going to dive first into some economic news. We're going to look at last week and go through this week because we got some good information that came out. So Monday. Last week on Monday, we had manufacturing prices. Okay. So, manufacturing prices, they were lower than forecasted, which is a good thing, right? We see ISM manufacturing prices. Um, Actual greater than forecast is good for currency. So, which would be bad for the market. This is a component of Purchasing Manager Index, but reported separately as an inflation gauge. Above 50 indicates rising prices. This is the worry. Okay. This is the worry for those of you guys that don't know. And I know we're jumping right on into it today. So I hope you guys are buckled in because we got a long way to go in a short time to get there. Right? We're seeing in both manufacturing Purchasing Manager Index and prices that there is an increase in the cost to produce a good. Well, let's let's just rehash something. And I think we talked about that. I do so many presentations and stuff. Sometimes they all come together. But last week, I think I remember talking about if you owned a pencil factory and you had the cost of the wood went up, the cost of the paint went up, the cost of the graphite went up, the cost of the rubber for the eraser went up, the cost for the aluminum went up. And what would do you think your prices on that will have to do? What do you think your prices on that will have to do? Kyla's got it, right? If you're going to sell that pencil, right, it's going to go up. You're going to have to raise the price of that pencil. And that's what we're going to see happen across the board. Now, there is the number one reason right there for the Fed to hold interest rates where they are, if not even raise them. Mm. We'll talk about that in a second and that impact. You also had Fed Chair Jerome Powell speak. We looked at JOLTS job openings. More jobs have begun to roll open. You had non-farm payroll change. It was supposed to be at 111,000, came in at 37,000. That's a big miss there. Okay, a big miss. And then we also had the beige book come out. I'll tell you about that. We had non-farm payroll come out on Friday, and it looked to be better than expected, right? And we looked to see the employment rate held. Here's the problem. Okay, and I'm gonna give you guys this is my thing against I have a big thing against what I call the letter channels, the MSNBC, the PBS, ABC, BBC, CNBC, Fox or FOX, if you will. You name the letter channel. I just generally their goal is entertainment and to push information out, yes, but also push opinion out. And one of the things that it's so funny because I still watch CNBC during the day and stuff like that. I have it on in the background in my office and stuff, but it's really, really funny because I hear all the 4, 5, 6 months ago remember when President Trump was closing all of these government offices and our Doge was or whatever, like USAID, they closed them, and the education department, they got rid of a bunch of people, they rehired a bunch of people, things like that. Do you guys remember that happening back in like February, January, February, even March, even? Yes or no? Just making sure that we're up and we're paying attention here. Okay, great. So those individuals will not be counted until July or later in the non-farm payroll. And then when you had Microsoft or Google lay off 30,000 employees, Microsoft lay off like 3,000 employees, Facebook lay off thousands of employees, Google then again laid off another 10,000 employees, Apple laying off employees, all of these companies, tech companies that are laying off employees left, right, up, down, and center. You're not seeing those counted yet either, because those cannot be counted until they actually have their severance has is period is over, right? So somebody who got a 6 month severance in February, they're not going to be counted until July or August. Does that make sense? Yes or no? Now, we talked about I'm gonna show this slide here. Okay, last week, if you were here or watched the recording, is we talked about the five the five factors that tell us that we're in a recession. This is not like what I make up. This is literally what the actual federal government, the Federal Reserve, every economist in the world will tell you. This is how the US says it's in a recession. We're not just the 2 quarters of negative growth. We know that, okay? We know we're not 2 quarters of negative growth. That's just step one. We have an unemployment rise. Okay. Well, if that's not being counted until then, that's a major concern. I will also tell you, listening to the head of the ports for every state, they had like a report that they put out um, recently, and they said that, hey, look, right now we are seeing about half the ships come in that we normally see this time of year, which tells us that, hey, this is when people should be ramping up purchasing so that way goods can get to stores by the time Christmas rolls out, et cetera, et cetera. And so all of the ports are saying roughly half, and that's causing them to have to kind of furlough dock workers because they don't need them, you know? And so those people aren't going to be counted as well. Consumer spending declines. We haven't seen that yet at all. That's been, right up there. But consumer spending also incorporates medicine. So, Medicare, Medicaid, those aren't counted in this. We also see when you go to the doctor and your insurance pays for it, that's counted in consumption. Production and sales stagnation, right? That is when you see a slowing of production in the United States. And then inverted yield curve. We had that for 744 days. But all is not lost. I will say that. I think that this is what personally I've been saying. And we're going to go into a little bit of the market right now. And then we're going to go back and take a look at some fundamental news here as well. So I have on your screen the SPX, the daily chart on the SPX. I'm going to clear off uh, these drawings. And give me 1 second, folks. Sorry about that. I have, let's see. Charles, great point. He says, "Hey, people are buying before tariffs as well. So in effect, there is potentially a reason for consumer spending not falling that fast." You're absolutely right. Absolutely right with that. So I will say, I have been saying for some time that I believe that we are going to see and let me add on this other indicator. I just like it. Let's say here, go here. I'm gonna take these. I don't like all the extra stuff on there. Just, I'm a very basic human being when it comes to this stuff. So, so this is like one of the systems that I personally use, and that's why you see it so often. Last back in May 27th, we saw a buying opportunity, and you would have been buying right here at 59.15. We're up at 6,000 right now, and it's continuing to buy. Buyers are still in control. Sellers have not taken control yet or anything like that. We still do have some gaps in the market, right? We still do have gaps in the market right here. I need to use a better color. We'll just use black. There and there are the two major gaps in the market on those black lines. Um, and what I honestly think is that this year What may happen is we might see a run up in the market for a little bit, okay? A run up in the market for a little bit. Could see it maybe go as high as 6,300 to 6,500, and then we get another big pullback. Okay. However, by the end of the year, I'm going to go ahead and step out on a limb, and I'll either be, as I said it before, and I know I got a lot of laughs out of this one. I'll either be Nostradamus or Nostradamus here, but I'm going to tell you guys right now, I really believe that we are going to end the year plus or minus 0.5% of where we started the year. Right? This year was a year of being flat. Next year, I think we have a very turbulent year. The reason why I think next year is the turbulent year is because at that point, we are going to see, we'll have the tariff deals in place. We'll know what's going on with China. We'll see we'll see kind of the fallout of the job market as well. Okay, we'll kind of continue to see the job market fallout as well. We will see, we'll know how consumption has shaken out, and we'll have a clearer picture of what the next few years are going to look like. Now, I will tell you guys, and I covered this last week. Warren Buffett, Ray Dalio, Cathie Wood, Michael Burry. Cathie Wood manages $30 billion. That ain't nothing to shake a stick at. Ray Dalio is several $100 billion. Michael Burry is several, tens of, probably right in the 20 to $30 billion range as well in assets under management. And all of them have shored up holdings and are sitting in more cash than they ever sat in before. Well, let's take a look at one of the tools. I'm going to go to trades trending here, right? Sylvia, absolutely. We'll talk about real estate as well if you guys want to. How many of you guys want to talk about real estate as well? So just to give you guys perspective, I'd never really kind of broadcast this, but back in the day, my first so I was going to go in the military, got a hold of my heart, in between the walls of my heart, was disqualified for military service. And I went and started working with in real estate and Chewy. Gotta tell you, brother, that I looked into what you were talking about. We need to have a conversation. I keep forgetting to give you a shout. So send me an email or send Brent an email and we'll get on together, okay? Yes, I looked at it. And I want to tell you all about it, the ups, the downs, the all of that, because we got to make sure of a few things for yourself. Okay. So the thing in real estate, so I worked in property management. I worked at the largest property manager in the world. Then I ended up getting recruited and working on the private equity side of property management, learning how investment companies and hedge funds invest in real estate. So I have that experience. It's always been in my back pocket. I rarely talk about it, but it's there if we want to talk. Okay. So the first thing I'm going to bring up is let's look at the historical averages here of what's gone on in the market. Okay. So if we take out, I'm going to not look at this year. Now, just for you guys to know, this is called Trend Insider. It's a really cool tool. The way I like to use it is I look at the historical movements of the blue line is 10 years ago. The yellow line is 20 years ago. And the red line is from 1993 to today. And it shows you how on January 1st, how, every single one of these, the movement is pretty much very, very similar, right? Making peak highs in mid-February, then pulling back through early March and into late March, and then rallying up through April, and then continuing the rally through May, and then in June we kind of have our next big dip all the way through June 26th. So let me ask y'all, should we be if this is June 8th? Okay, let me use my handy dandy drawing stick here. Right here, that's June 8th, and that was the last 10 years. This high is June 8th, and that was the last 20 years. And this high is June 8th, and that's been since 1993. So I don't know how many years that is or not yet. So my math, my mental math ain't there. No, I'm joking. But that's since the historical average. All three of them down to June 26th, down to June 26th, down to June 26th. What do you think may happen? Just kind of guessing. If this is what we're seeing, what do you think could potentially maybe should you be put? This is the S&P 500, right? This is the S&P 500, okay? If we go and we look at and the cool thing about this is we can look at Nasdaq, we can look at stocks, we can look at crypto, we can look at futures, we can look at it all. Okay, doesn't matter, right? Does not matter. If I go to here's the Nasdaq, the Qs, if you will. Okay, here's the Nasdaq. If we look at, let me take this year off and let's go May, June 7th. There's June 8th. We go from high to low, high to low, high to low, and June 26th is our new low. Well, well, well. I'm just telling y'all. I'm not saying what you should do, but it does not take Stevie Wonder to see what's going on right in here, okay? And then if we go into looking at like COT Insider and we look at COT data and reports and charts, we're going to see that this is going to be a little bit difficult to see. You know what? I'll take open interest out. So the red are commercial traders. These are your institutional investors, your BlackRocks, your all of that, okay? And your yellow is non-commercial traders. All right? Your non-commercial traders. And these are the us's of the world, okay? And open interest is what the commercials are doing. All right. So they are actively, and let me just slide this. There we go. We're just going to look to here. And as you can see, open interest and commercials sold off the market early in May. And they are now back up high. And now they're looking at the next sell off because open interest has just crossed below. If we take off them and look at the non-commercials, right? These investors are looking to start buying up the market. Not the smartest move if you ask me right now, right? You're seeing you're seeing the large traders, they're getting out of positions in the market. They're not buying up the market, okay? I think that would change if we make an all-time high. However, if we start to see the market push down again, even if we just fill these two gaps by June 26th, that's a normal movement. It's not like I'm saying we're about to see a 40% drop right now. What I'm saying is we're probably going to see a normalized movement back down here. And it's going to be on the news. They are going to drive you guys insane and me insane by saying, oh my God, the market's back below the 200-day moving average and the world's ending. And, we got this, that, and the third. And, McDonald's is putting, pesticides in the French fries. And all we need to realize is that, guys, look, it's a normal wave up to down. Now, long term, 3 years, 5 years, I think the market is headed down. I think if you want my number one prediction is that by 2032, we are going to be in a trough period of a market, a deep trough period of the market. Um, and that comes into play with the Buffett index, the Laffer index, as well as um, oh my goodness, they do Schiller index as well. All three of those are saying we are way overvalued. So let's get into a few stocks, okay, as well, and we're gonna get into a little bit of news as well. Um, and I'm gonna give you guys some positions that I truly, truly believe in, and we're gonna talk a little bit of those as well. Okay. So let's get into these. All right, so this news. First and foremost, Monday, U.S. and China trade talks begin in London to focus on export controls, which is what Trump was tweeting violated the kind of 90-day hold, is that they weren't exporting enough of the precious materials to us. So, that's what led to that early last week. Japan's Akazawa says still searching for middle ground with US, but still targeting a deal by mid-June. So, got a week or two. U.S. negotiators extending their stay in India in a potential sign of progress on a trade deal. China fast tracks approval for rare earth export licenses for some European companies. Notice I did not say United States companies. Interesting. Um, then you have 50% on tariff on steel imports could be vulnerable to legal challenge. We'll see. Um, the other is junk bond sales surging amid high demand, expected resurgence of trade tensions in July. So that means that people are finding safe havens for their money and not just looking at, you know, at specific things. Corporate cash levels are falling in a potential sign of slowing business and falling profits. Folks, I talk about this with the economic cycle. Let me see if I can find that. I know I have it here somewhere. Um, Here we are. So I talked about this with this economic cycle. I literally took this from a textbook years ago in my MBA. I took a picture with my phone, right? Stock prices fall, commodity prices fall, GDP decreases, bond prices rise, recession, and property values fall. This is the area we're in right now. All right. This is the area of the business cycle that we're in right now. Just letting you guys know. This is what we need to be looking for. This is the opportunity. Now, here's the thing though. I believe that even in a bear market, there are still places that you guys can do good. And it's about, there's something that we're going to talk about called sequencing of returns. I'm going to show you its importance here in just a little bit. But this is why you're in these sessions and why you should continue to come to these, as well as I do a webinar on Thursday evenings as well. So, I'm going to get a lot of you guys registered for that if you want to. Actually, you know what? Give me a second. I'm going to just do this. What am I being crazy for? Zoom.com. I got all these screens for a reason, right? My account, webinars. So this one is Thursday at 7 p.m. Let me do this. add, copy, paste. So this is for the Thursday webinar. Actually, no, that is the. Hold up. Did I do the wrong one? I darn sure did. Do not use that link. You can if you want to, but I'll send you the one for traders, invitations, copy. I don't know if I can delete that. Yep, I can delete that. Here you go. That's the link. I don't know if I deleted it for everyone. Use the link I just sent you all to get registered. So this link is a Thursday webinar where I talk a little bit about how you can position yourself in your retirement to make sure you stay retired, as well as to not lose any money, as well as to grow money. Because the tools I have, they guarantee no loss. And I can say that because it's a legally binding document that we will both sign, because how the company invests and how they invest and how they're actively managed, as well as how they are able to move around assets. But you lose nothing if the market goes down, and you gain money if the market goes up. So in an up market, you're good. In a down market, you're great. So use that link. It's Thursday, 7 p.m. If you want to join, I did send you one on Tuesday as well. If you want to be in that, you can. That's going to be focused a little bit differently on different individuals, but just testing something else. But if either or, go ahead and if you register, let me know. Okay, so we're talking now, right? Stock prices falling because this corporate cash levels. See, corporations use their cash when the use of cash by banks is too much. Is it outweighs the return on the return on capital, or ROIC, if you will, return on invested capital, is lower than using your own cash. In a good environment, it's cheaper for banks or for businesses to borrow money and invest so that way they can use that cash to do stock buybacks, to reinvest, to, add employees, things like that. But when you see corporations cash shrinking, that means they're using it for staying afloat or sometimes some investments. Not the greatest, but there's opportunity there. Okay. Let's see. Um, let's see. Treasury officials arguing to Senate GOP that Section 899 revenge tax threats are an important tool for negotiating better deals. Trump administration scrambling to rehire many employees who left under Doge, including senior staffers who retired voluntarily. White House deploying 2,000 National Guard troops to LA for protesters. Interesting. And you guys know, I don't even want to get into the Twitter battle between the other two companies as well. Right. So I'm going to go into a couple of stocks that kind of missed, and let's see if there's opportunity. And then I'm going to go into a couple of stocks that I think there's some great opportunity in right now. And then we'll hit some real estate as well. Okay. So my first stock I want to check out is none other than the Musk man himself. Let's check out good old Tesla. Now, the Twitter war happened. We saw Tesla drop like a rock. Okay. I have been saying for some time that I wanted to see Tesla pull back. Right. My ultimate low is this gap at 148.45. I was looking for it to drop there. There is still a low, and I'm going to hide this for a second. There is still a gap right here at 243 that we could see filled. So we'll go, and I'll label these really quickly. We'll call this gap one. Yep, two. Now, let me ask you all this. I wanted y'all's opinion right now. What kind of company is Tesla? Like if you had to categorize Tesla, what category would you put them in? Automotive? What do you guys think? What kind of company do you put them in? Someone said computer, tech, AI, tech, AI, tech, manufacturing. That's good. Tech. In fact, most of you are right, right? They are a tech and AI company. They did, you know what's crazy is Elon asked to end all subsidies in the subsidies on oil and in the subsidies on electric cars. You know, if we ended the subsidies on oil, which is billions and billions and billions of dollars, then price of gas would probably be like $12 a gallon. I think a lot more people would buy EVs if the price of gas was $12 a gallon versus $3 or wherever it is now. I mean, that just is what it is, you know? We'd have to figure out a better way. And I know we talked about this last week. Government farming subsidies ended earlier this year, and we've already seen 30,000 farms go bankrupt and get bought up by a company called Acre Trader. I'll let you guys dig into those lines, okay? William, the confirmation it should come later today. I'll double check and make sure you got in, just to make sure, because I used a special link there. Yep, I see a bunch of you guys have, registered. I see, like 50 of you guys clicked on the link. You gotta put in your name and email and all that to register. So if you need it, okay. So Larry, yeah, you didn't know that, huh? Yes, Larry, it's very true. The oil industry is very much, we get subsidies for the oil industry gets subsidies from the government. Whether it's through trade, whether it's through actual cash and expenditure on drilling. There's fracking subsidies and there's pipeline subsidies as well. A lot of people didn't know. I did not know that until I'll tell you how I met this person. And this guy has gotten to play Augusta National a bunch because he works in the oil industry. He is the CFO of one of the largest oil companies in the United States. I met him when I lived in Houston. Used to play golf with him all the time, and I picked his brain all day, every which way you could imagine. Still do. Whenever I have a question about oil, I know he hates seeing my number pop up. I know he does, right? I know he does because when it does, he knows we're about to get in about a 30-minute conversation, 45-minute conversation about what's going on. But yes, Larry, you can look it up. There is subsidies given to oil companies by the United States to help with production, help with shipping, help with pipeline, help with drilling, and help with refinement. All in, right? Tesla, for those that don't know, they are extremely dependent on AI. Tesla is by all means a data company and an AI company, both one and the same. They're using the data of drivers to drive the information to the self-driving vehicles that will eventually be self-driving, and we're probably talking in the next few years because now they have trillions of points of data that they have fed this AI so it knows how to act and react in specific situation. And so that's why I personally think this is a company that you want to own. Right? You can trade it if you want to, but I would also, if you are looking to buy a stock, I think Tesla right now, great opportunity. Is it going to fall further? You bet your bottom dollar it's going to fall further. I absolutely agree. We're not done with this Twitter war, or we're not done with the last of the public comments. We're not done seeing the shorting, but I'm telling you now, Tesla is a company that is still one to be purchased. All right, that's just personally me. There's another company that we talked about, OKLO. This is a nuclear reactor company. We talked about the fall, and last week we saw Tuesday, Wednesday, Thursday, we saw the big fall. They came roaring back a little bit on Friday. But when I look at this, on the shorter term, I'm going to go to like a 4 hour chart just so you guys can see what I'm looking at. Shorter term, if I go from here to here, looking at my fib, I could see a pullback there to fall even all the way back up to 55. I could see it rally up to 55 just to fill this gap. I think at $40, I think you should be looking into this company. At $32, you should definitely be buying this company. Nuclear is the way that energy is should have moved 30 years ago. It should have moved 20 years ago. Should have moved 10 years ago. We were set to open up like 7 or 8 different nuclear reactors in the United States back in 2019. We had this little thing called COVID. Don't know if you heard about it, but it was really small, didn't affect much, but it affected that. And then we also had yes, Atul, I got you. I'm gonna share it to you now. We also had, the first battle with China and trade back in 2019 as well, and that kind of slowed things down because parts were coming from China, etc. But there is OKLO has redesigned the nuclear reactor as well as another company called SMR. Now, SMR, they make reactors for like submarines. They're testing airplanes, which is wild if you think about it. Okay. They're amazing company, SMR. I really like this company. It's $34 right now. If you're looking for here, I'll say this. My next buy on the company, because I don't care about the whipsaws. My next real buying opportunity on this is right in here. Anywhere between 26 and 25. We fall anywhere at 26 or 25, I'm okay with it. I'd even buy it at 28 because what's $3 in the if I'm gonna hold it for 3, 5 years? Okay. Then the other URA is a great one as well. That's a uranium ETF. Okay. I a lot of these new nuclear reactors can use uranium that we've already used before, unenriched uranium, which is amazing. It's more stable. But you saw when we talked about this last week, went from 28 to 33 in the week. So I'm looking again, waiting on a pullback. 28 again is where I'm looking at, anywhere from 31 to 28. Great opportunity to buy in there. All right. Then the next stock, QUBT, right? This is a data engineering company that supports tech firms in building and scaling AI models and AI systems. So they are using like they're going to be the bridge that takes a major corporation from how they do business today to AI so they can get rid of, I hate to say this, I really do. I'm not a doom and gloomer, but I have to be real. Um a They have to Andrew, that's funny. I wish I would offend half the audience, so I don't want to do that, but that's hilarious. But they what they will do is like, let's say, I don't know, company XYZ. Let's say IBM, or not IBM, they're a tech company. Let's say, I don't know, um, some random company. Just think of one, whatever comes to your head. They will be this QUBT will be the company that kind of bridges the gap to AI usage for the company. So they will get hired a lot. Now, this is very early days for this stock. Expect high volatility and whiplash and stuff like that. Procter and Gamble, great, 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 great call there, right? So again, maybe 957 is better than 13. But if you're buying like 10 shares or 5 shares, dip into this. We're building a position into this. Okay. INOD, that's another one that I was following. Basically, I got some of these directly from what's called a 13F filing by Kathy Wood, who, if you don't know, she has, the $30 billion. Um, and assets that she manages. Again, I like this company a lot. Think it is going to continue to think there's still some rallying left in this. Eventually, right, we'll get another pullback and you can enter in there, or you can wait to enter in now. Again, do what's best for you. These I am talking about are longer term plays, not the short term plays. Does everybody understand that? Give me a yes if you understand that. You understand that these are long-term plays, not short-term plays. Okay, good. Now, we're going to check in on a couple others. Let's take a look at gold. Here is So gold, we had been looking at gold for some time. Gold had been literally it rallied back right where we said we were going to get that rally to. It came back down, back to that line. We see sellers are in control. We Let's go down now to a 4 hour. So there's that gap that we called that great trade here. Pushed back, pushed up. We got sellers in control here, began to push down. We broke through the 20 period, broke through the 50 period, pushing down now. I think if we see, let me say this, if we see market volatility to the downside and what we looked at with trades trending and things like that seems to be happening and coming to fruition, look for gold to rally back up. I think gold kind of just hesitates back and forth, back and forth, back and forth for the next little bit because with gold, right, you have it's a safe haven area, right? I always say this. What do you mean by long-term trading, long-term time frame? What do I consider long plays? Long plays are years. Right. This is something you want to build your portfolio, add to your portfolio that you're going to hold and just cash in. You may hold it for the next 3 to 5 years, right? Is what I anticipate for some of those trades. Now, gold, I think we're going to see the ups and downs and kind of like a range bound season in gold. Okay. I'm going to look at the ES as well, which is the S&P. On the S&P going into, let's look at a daily real quick. Looking at the daily chart, we see buyers still in control, but we see a little bit of selling movement coming in. We see buyers are dwindling there. If looking at this on a smaller time frame, if I'm trying to predict what I'm looking for Monday, I'm still thinking pullback, right? I'm thinking pullback off of that, recent high for the last week or so. To start the day, maybe we come back down to 59.90. Maybe we rally back up, and we're gonna live around this like 6,000 to 59.80 range for a little bit until the market has a decent move one way or the other. So I got about 10 minutes left. What I'm gonna do is this, okay? I want to do this. Okay, is for you guys, type in a few positions that you want us to look at. I'll look at those as well. And the other is I'll talk a little bit of real estate. Okay. So real estate is a very high risk area right now. Very high risk area. I'm going to just let you guys know that. Real estate is the reason why it's high risk. We have 9.5 million renters are 2 or more months behind on their rent, and 6.45 million people are 3 or more months behind on their mortgage. So they are what's called the seriously delinquent phase.
To put that in perspective, in 2008, we had about 6 million people at the peak that were delinquent, seriously delinquent. So we're already over that by half a million. The thing that worries me is the FHA loans and the VA loans are the ones that are behind. So your first time homeowners and your VA and your military buyers are the ones that are behind. The next big thing about real estate is, we're seeing prices fall precipitously. I can speak local to Florida because I live here and I look at it. Speak local to Florida because I live here and look at it. Okay, all the time. We've seen 40% in some 40% drop in some areas. I can tell you where I am. There was a house. It's funny. There was a house that I looked at, thought, man, maybe a year or two, we'll look at something like that. If things are continuing to do well and grow and all of that. And the house at the time was like, for where the area it was in, no, 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 right? No, is what I was thinking. Is like, nah, this ain't right, what personally. And then um, I looked at it a couple weeks ago, and it's gone down to from 1.1 million to 795,000. That's a big drop, right? That's a big drop. Let me see if I can find this one other. There's another area that I was looking. A client of mine, he lives in the area, and we were just looking at real estate there. They're selling 2,000 square foot homes for over $1 million. And it's crazy. Okay. I live just north of Orlando in like Lake Mary Heathrow area, but then I've seen other homes and the villages are down 30%, right? Let's see. Yes, Jack, post any questions you have there as well. Okay. So let me go through. I got a lot of people in here asking about stuff. So let's look at Palantir and Soundhound. Palantir short term. Short term on Palantir. Let me go to like a 4 hour chart here. I like Palantir. Hmm. Mm. Personally, this is what I think about Palantir right now. I think that the picking up that government contract is going to do great things for their bottom line, but I also think investor sentiment is going to change when it comes to how much data Palantir is actually getting from individuals now, right? They're going to be scraping the internet for all of your data, and it's on personal people. Okay. So I think Palantir is this one unknown. Short term, like, are we talking next week or two? What I would consider, or next month or two. If we're talking next week or two, um, I am looking at this to kind of break this low of support and potentially come in here into this 110 range. I think that would be healthy. I think we've we've filled that gap at 89. So this kind of 110 range is where I'm looking at Palantir. Let's see. Soundhound, Sound. This Soundhound AI company, I think this is I hate to say this, I think this is more of a pump and dump type deal. Will it pump up? Yes, I think so. You think you may get it up to like maybe 14, but I'm not too huge on it. I know that we're seeing commercials on MSNBC about that and stuff like that. I've seen that stuff a million times over. I'm kind of jaded against to that as well. So I don't want to throw, all of my 2 cents in there at that. But looking at this, I just don't see the value there yet for it. Missing earnings really crushed them beating earning, missing revenue again, beating revenue, then yeah, sure. So maybe let's take it back up to like 14, 13, 14. Okay. Bitcoin, we'll use Coinbase. Bitcoin wise, look, I think Bitcoin is, we're seeing like technical structure, but Bitcoin follows its own damn rules. Let's just be real. Technical structure wise, we should see it fall back into the $93,000 range, right? But let's be real, it does whatever the hell it wants to do. So looking for it, potentially just continuing to rise, okay? Looking for it to potentially rise. I think even if it does pull back to 93, it's going to be short-lived. You're going to see people begin to buy it back up. So if you want to set some buys in it and then see it, rally back up, I really, really do think that you will see something in there as well. I'm going to do one or two more. Um, let's see. UNH. I like UNH. Healthcare is still a big expenditure. I'm a big buyer in UNH. I own UNH. I know we're gonna fill this gap. Okay, we're gonna not have healthcare, and you think that's gonna happen? Come on, right? It's $303 right now. You got to buy on it. If you're looking for like an option play, give me a second. I'll show you. UNH. So very, very simplistic strategy. And if you want more advanced strategies, we can look at something like Vortex to help us with more advanced strategies. But 304 just to even 378. This is telling us the buy the July 4th call at 305, right? So the July 4th call 305 is what we're looking at. So $2 out of the money, and you'd be looking, my exit on this would be 376. That's the first short-term exit. All right, so that's that. If I throw on, let me see if I can load Vortex here. If I look at Vortex and I'm trying to do, a multi-legged trade, you have your out. I would be going for our purple bands on Vortex. Okay. Looking for this to just buy up to at least 315 and, collar it with a put at 290. So you got a good spread trade as well on Vortex if that's how you like to trade Vortex, right? It's totally up to you. How you trade whatever you trade. And okay, I got to run here with one more. I'll do Hood. So Robinhood, I like Robinhood. I think it's, going to continue to rally. And I think that market energy is still in favor of Robinhood rallying. However, we are tipping out on that market energy. So I know there's going to be a pullback coming. You just don't have meteoric rises without pullbacks. And so if we get a pullback into the 51 area or even, a pullback into 63, right? Like I would look at this on the shorter term to maybe buy a put from 74 to 63. That's $10 a premium. That's, a really good amount there. Um, and let's see, what are the thoughts on buying tax lien certificates from Florida counties or other states, even though it's guaranteed by the government? I think there are warning flags. Yeah, Jack, I would not be doing that right now. That's just me personally. I look, I never try to catch a falling knife. I stay out of the room when a grenade's going off, I'll come back to it when everything's when the market's when it's like a Lego house that's been kicked over. Some assembly required. I'll be back in it. Looking forward to meeting with you, Jack, as well. And guys, look, if you have questions about, hey, my retirement is set up in X, Y, and Z, or is my family going to be protected from this, or things like that. One of the things that myself and Brent do is he's a part of my team as well as other team members that I have, is I do one-on-ones with individuals to help them with their retirement. That's where my real passion lies, right? It's not just trading. I'm just, trading something that I've learned to do, and be doing this anyway. But my real true passion does lie in asset management and helping people grow their wealth through things that allow them to have what's called one of them is a 0% floor, right? And I just want to share this with you, okay? So if you invested right there in the top left corner, $250,000, right, into the S&P back in January of 2014, right? On the right-hand side in yellow, that's the actual returns of the S&P all the way through the end of May. Okay, so June is not counted in there. You would have turned your 250 into $749,000. Now, if I just took the losing months and turned them to zeros, which is what a 0% floor would do, that would be over $1 million. Guys, I think everybody in here would rather be the red line than the blue line. Would absolutely rather be the red line than the blue line. Okay, this is something that I'd love to talk to you all about. There's also, now this is not for everybody, but I will show you this. Not everybody can qualify to be in this. But recently just updated all of the numbers, and I'm going to update it now. 16.9, 16.9. So, and let me look at, you know what? Let me go to SPX and let me go to the 1 year chart. This actually, we'll just do the SPY because the percentage will be the same. So far this year on the S&P, we're up 2.23%. Okay. So, let me go 2.23%. So with this, okay, you can see this is our historical returns from 2014 to 2025 as of right this month. We're up 16.9% this year versus an S&P 500 index fund would have you up about 2%. The difference is if you would have invested with us back in 2013, you'd be sitting on about 2.2 million versus $1 million right now. That's the difference, okay? Let's see, Charles, I got your response email from our call. Interesting, Charles. I sent it. Charles, can you email me again just so it's top of mind, and I will make sure to get everything with you. I've also been extremely busy. Car got into an accident. It's okay. Just got having to deal with insurance and repairs and stuff. Everybody's okay. Everything's okay. Just dealing with all that mess. So that's what this week is at. Okay. So this is what I'm going to do, guys. This link, you can either use your QR code here and scan that, or B, I'll send the link out again. And you can book time directly on my calendar. And lastly, here is that Zoom link as well. So if you want to join me this Thursday, we have a special webinar that's going to be talking about this. I'm going to be talking about a tool that has a 30% guaranteed 30% bonus, and then a guaranteed 9.5% growth every single year that you don't defer an income. So, awesome, Charles. No worries. I will check my email. If I don't see it, you'll hear from me this upcoming week. Monday, the car goes in the shop, and then I pick up the rental, and then I'll actually be able to have a few days where I'm actually working all day long. So, been pretty crazy. But guys, I got to run. I'm late for another meeting. I look forward to seeing you all. Webinar very soon. Can't wait. Keep coming to these sessions. Looking forward to it. Have a great day, everybody.